Well, hello there, and welcome to another episode of the Innovantage podcast. As always, I'm your host, Max, and it is my ongoing job and duty to explore that edge between business and tech and to bring you your competitive edge. Today, we're going to be talking with Raimonds Kulbergs. We're going to be talking about funds. We're going to be talking about startups. We're going to be talking about the mindset that brings one from a successful exit to a successful fund. So, Raimonds, welcome to the show. How are you?
Great to be here. Excited.
Thank you. Thank you for being here. So tell us a little bit about yourself. How did your career go to founding the BADideas Fund? Why did you decide to name it the BADideas Fund? Are you only searching for bad ideas or are you also looking for good ones?
So many questions.
Yeah.
About myself, 3 times founder, 1 early exit, and I decided I want to invest in startups for a living. That sounded like fun. So set out to create BADideas Fund, which started off not as a fund, contrary to the name, but as a community or collective of founders investing in founders. So that's what it began with 3 years ago.
So can you tell me a little bit about your startups then? What were they about? When did that happen? Give us a little bit more detail.
Yeah, it was I always had this inkling. I want to build something on a global scale, and for myself, or be in the decision-making seat, and which I was not for a while in the beginning in my career. I worked at Ernst & Young and Deloitte, serving, buying and selling businesses, investigating them all over Baltics, also Ukraine. So that was a lot of fun, but it lacked this. Okay, am I in the driver's seat, making those decisions and mistakes? And so I felt like my last train was approaching the station to make the leap before my career salary cushion was too soft to say to make that leap. So that when I felt that, I made the leap and built the first startup, which was serving universities to help them be better at getting donations from alumni, and made so many mistakes. Happy to walk you through all of them, but had so much fun, and it was really hard. I went through Silicon Valley, through 500 startups accelerator. Allegedly harder to get into that than Stanford. Was an amazing school of how to build startups. Not necessarily apply those skills to my first startup, but I definitely can apply them to further things I'm building, as well as having an eye for investing in the best teams in our region.
So that was the first startup, but you mentioned you had several ones. What were the other ones?
The other couple was smaller endeavors, shorter endeavors. One was working with a Baltic bank to create a Klarna copycat for Baltics in our region, and the other was working with a marketplace model with a Pipe Drive co-founder in Estonia. But there were smaller stints, and over the couple of years of building startups, over time I got more and more exposed to other founders, and them coming and asking for advice. How did I did in this and that situation, and which is where I came to a crossroads. I thought, like, what is my next chapter in life? And I want to be looking at it in increments of 10 years at least, and asking myself these magic questions. If money was no object, what would I want to do? So that led me to thinking, okay, where do I get the most positive energy from? And that was actually not from building startups for myself, but from working with founders, helping them and seeing them succeed, seeing them not make the same mistakes, just helping them emotionally as well, and anything in between. So I thought, okay, if I'm advising this half a dozen founders simultaneously and over the couple of years, and I want to get more of it, how do I get it? startup investing is one way how to get more or scale it. So okay, it has to be startup investing.
Mhm.
So I'll do it for full time for a decade. Now, how do I do it? You can only create a fund if you have the track record, but I can't get the track record without having a fund. And luckily, in US, when I was in Silicon Valley, but later also in Boston, building my startup, I noticed quite a few founder and startup builder communities who invest either through AngelList or elsewhere, invest in other startups. And I didn't see anything like that in Europe, and still don't actually pan country. There's besides BADideas, I don't see any other community doing that. So I thought, like, let's create something like that, and because it felt like I want to be surrounded with folks who are smarter than me, and together we can have a better coverage of seeing the best startups, be much more capable picking the best ones, and also like supporting. We've walked the walk. We want to see them succeed, and yeah, so that's how BADideas was born.
So how did that actually happen? Like, how do you create something like that? A community of founders? How do you guide them? How do you unite them in a singular vision?
Yeah, it starts with a name. I actually had a number of names, and this was the one that a couple of dozen of my friends who are also builders from like all kinds of countries, and they had to like respond to me, which is what do you think about the name? And this was the name that got the most likes and dislikes. So that was the response to me for me, like all the answer I needed, that it is controversial enough. It can be disliked, but also very memorable. So BADideas, it was. So it starts with a name, but also a mission of when you're building as a founder any startup, it feels very lonely. It's a very lonely job. So. And you, at the same time, you don't have time to actually interact with other founders because you're busy. It feels like life and death. You want to build and succeed with your startup. So you need to have some sort of high filter, high signal to noise ratio, no bullshit kind of way to connect with other founders. And also see what's at the forefront, at the horizon of innovation of who is built, what teams or what amazing teams are building what. So you can actually get the inspiration from that. You can apply your knowledge or what you are talented at. Maybe you've built sales in your startup and you want to help others do the same. While helping others, you actually learn something. And so it's a really great melting pot of talent. So there's much more motivation than rationally, hey, I want to multiply my wealth. It's so many other reasons why folks join. So those are the motivations, and it felt like a snowball. It started like a dozen folks 3 years ago, and it was already from like US and Baltics. Now we are a community of 250 from 20 countries. Folks who have built such startups and scale-ups like HubSpot, Shopify, Dropbox, Uber, Bolt, Vinted, NordVPN, and Pipedrive, and Printify, Printful, and the likes, and anything in between, and different positions. So it's a community that also draws more together, and it's something special. I don't know if there's a recipe to replicate that. It's like also some serendipity there at the right moment, right first dozen people joining and create that energy that others want to join, and it's just a ripple effect.
Well, that's a good point, honestly. Yes, because from an outside looking in, it can sound simple, right? Well, yeah, you just make a startup, you exit successfully, or try a few times more, and then you find some friends, and then you make a fund, and then you invest some money. But for people in the outside of the startup world, I can definitely say that startups are a bad bet when it comes to investing, like just mathematically speaking. Like 99% of startups fail by year 3 or something. That's the stat, I think. So like it's a risky thing, is what I'm trying to say, right? You don't just do it for the fun of it. You have to have a clear vision and understanding of where you're going, of why you're doing what you're doing, especially if you're investing your own money and not just somebody else's. So what's your take? Is the startup kind of scene worth investing in, or if you had to go back and invest into like Bitcoin 10 years ago, you would just do that?
I would push back on that. I think startups is the best asset class if you do it right.
Okay, that's interesting.
You don't want to invest in 1, 2, 3 startups and then call it a day. For sure, you're going to lose money. You want to get to a diversified portfolio very quickly. And actually, your chances of return double if you invest not in 10, but in 20 startups. Statistically, the returns for you, if you have that portfolio going from 10 to 20, they double. So you want to have a good diversified portfolio, and that's actually one of the most common angel investor mistakes. You start by investing in a couple, over-indexed, weight in too much weight in those couple of investments, and then you're okay. I don't have much like free capital floating around, and patience to invest or I'm not hungry anymore to invest for the next couple of years. But you have to be if you want to build up a good returns. But then the other thing is like you need to have a really good deal flow to start with. You want to if your sample that you are looking at and choosing the diversified portfolio from is shit, then your returns are shit. So you want to make sure that you are looking at the best and there's a couple of ways how you can do it. If you are an angel investor, you can build up a brand of your own where startups see you as visible and someone who can help. In the end, it's quite a lot of work, and you probably end up spending quite a lot of time on it, if not full time. Alternatively, you want to join some sort of community. There's plenty, for example, on AngelList as well, and on investing in US and other communities that do the work together collectively or have some sort of way to attract a good deal flow. So yeah, deal flow and diversification, I would say these are the core two things. But like I would like look at the public, like Bitcoin aside, which you mentioned, look at the listed companies as an asset class. If you look at what was the investment landscape like a couple of decades ago and what it is today, it's completely different, right? IPOs are no longer these small, adventurous, really hyper growth companies that you want to back and the Yahoos, right?
Yeah.
You have all of the growth, more much of the growth squeezed out of them already by venture capital. And what you end up with, like statistically, you lose money if you invest in IPOs, right? So I think that is something that I would want there to be changed. Yes, startups is a very liquid asset class to invest in. You have to be patient for a decade to see meaningful returns start kicking in. But you also want to be playing the game that all of the big money is playing in. And yeah, so this is one way how to do it. Chip in and create some sort of vehicle to play the game.
Again, sounds pretty simple, right? Like very, very basic assumptions in any sort of investing. Diversify your portfolio and don't invest in everything that you see, but try and collect the flow of deals that you actually believe in or understand in, or any other criteria that you value. I want to understand a little bit, how do you approach that? So what particularly is your method? Who do you invest in, for example? What constitutes a good investment for you when it comes to startups?
It starts with a name. BADideas Fund. So why BADideas? First of all, we don't treat ourselves too seriously. After all, our founders would need to have our name in their cap table in the line like that says BADideas invested. So BADideas Fund invested. So you are a bad idea. You have to own it. That's also it's also what Paul Graham, one of the grandfathers of startups and tech, his point was many of the successful unicorns, decacorns, they were really silly, bad ideas initially, right? Who would have wanted to sit in some stranger's car and be taken through the city, or and then stay at someone's couch overnight who you don't know, and yet they are so successful. The Ubers, the Airbnbs are such successful companies. So these founders need to reimagine the future. That future is not obvious for many. So that's already part of the answer. You want to be betting first and foremost on the founding team, not the product, not the market, not the traction, not what it is right now, but what it could be through the lens of the founding team. Yeah.
That's interesting. So you are investing in like early stage startups, from what I understand,
Yeah.
right? Like very early stage. And how do you then understand whether or not the team is a fit?
I like to joke. What sort of I asked founders, so what childhood trauma do you have? Here's mine. that helps understand what is, if they have dealt with it in a positive way, that trauma coping mechanism becomes a superpower for most. At least for me, that has. And if you haven't worked with it, it can burn from both sides, and then you might not get to a successful outcome. But you need to have some sort of dissatisfaction with status quo, with what it is right now, always impatient, or some patience, but restlessness that we need to change. We need to go. We need to move faster, and hold both. Be grounded with now, but also drive. And like, how can you drive and change the future with like just being content and just being fine with what it is right now? So you need to have this some part of you have being dissatisfied with what is right now, and being driven to change. So there's, and I don't know if yeah. So you need to have some sort of screws loose, I suppose. But it is a mix of qualities that we look for. It is integrity is very top part. It's being able to articulate clearly what you are after is another. After all, you'll like that means essentially sales, selling your idea to an investor, to your peers, to your future hires, to your customers. After all, so being able to articulate not just a sharp mind, then being able to spot the future. And yeah, I can go on and on. Actually, we weight 50% of the weight of how we evaluate whether we want to invest in the startup or not is on the team. Everything else is like the traction, product, distribution, market. But this reminds me, like I was listening in on a fireside chat in Copenhagen on how Lovable co-founders, Lovable founder Anton and was building his startup, which is blowing up and becoming basically a beacon for Scandinavian and Nordics tech, AI tech. And one question was really nice from the audience. If you were building, if you were in our shoes, how would you kill Lovable? And the answer was also really nice. You have two options. Either you focus on such a narrow market, such a narrow need, such a narrow customer that nobody will dare to do it. It just doesn't make any business sense, but you are just so focused that you are making them so satisfied that you can create that as a platform to expand to other things. And the other option, how you can kill Lovable, is just imagine a future which is not now. Just extrapolate a little bit into the future, like 12, 18 months from now, what it will be and what is not obvious, because human brains are not wired to think in exponential terms. But if you do the mental gymnastics and work, then you can actually get to some controversial conclusion yourself and make a bet on it. So you would not be building for today. It would not make sense. It would not make money. But in just enough time, if you have patience, you could be ahead of the competition because you'll be the first one there.
Patience and capital, I'm guessing, as well, because it takes money to outlast the competition a lot of the time.
Less and less so, right? Yes, you need that capital for speed, but at the same time, you have the other lever. The ease at which you can build any startup is just increasing, right? It's less and less barriers to build. So if you have less and less barriers to build, you no longer need your moat, your barrier for other competition is no longer as you had 20 years ago. Servers in your office, right? It's listening to the customer, right? So listening to customer, what does it take? It just takes ability to call up, have those conversations, or sit in the office of your customers, follow them around and see what problems they have, and then be very meticulous in solving them. It's like doesn't require too much capital, right? You can have very creative ways how to. You have to feed yourself, but if you have that part covered, and then you need to just find that way to reach customers.
That's a good sentiment. I definitely share it myself, but I am in business development, so I am a little bit biased when it comes to customer relationships and what's important in a business. But you did mention that you made a lot of mistakes when you were a founder yourself. And now, with the benefit of hindsight and having invested in others, what do you feel are some of the most transformative, maybe, mistakes that you've made that you learned the most from?
Yeah, there's many. Let's start with customer discovery. That's a term that any founder should have in his vocabulary. How do you methodically get to an answer? Is whatever you had in mind you want to build actually needed by anyone? I certainly assumed so. I put all my savings on it. I had my spreadsheet tell me that in 12 months we'll be in the black, we'll be profitable. And every month I would show to my team, hey, we are this much cash left in the bank. Next month is less, next month is less, no pressure, but we need to find an answer. And had we done proper customer discovery and not rush into selling, would have an answer faster. I spent a year under the assumption that, in my case, my customers, universities in continental Europe need my product, need actually donations from alumni, which seemed obvious, right? Who wouldn't? But actually, no. Universities don't need that. Leadership doesn't care about that. So I spent a year with the wrong assumption. Would have gotten to that answer much quicker if I had just bothered to get my ass off my chair and ask those questions. Like in one way or another, reach, which is not easy, right? How do you reach the leadership of these universities? But if I had done that, got into an answer quicker, can move on and iterate. And that's what all matters, like iteration speed. But then what I did was, okay, if continental Europe doesn't care about my problem I'm solving, then clearly UK does. They have lots of high quality education institutions, and they raise donations from alumni. And I managed to get like Oxford colleges, Cambridge colleges, London Business School as customers. But then that was my next mistake. Looking at the market size, it's just too shallow, too small to make a unicorn, to make a really hyper growth and big enough market to swim in. So, okay, what is a big enough market? And US is much bigger culture in donations, and I turned there. So how do I get there? I certainly don't have at the time a network and reach. I need to have some sort of means of help, and as an accelerator like YC or 500 startups would be something that would be my target. Got into 500 startups, moved to Silicon Valley, and that was how I got Georgetown, West Point, UC Berkeley, and the likes as customers. But you can imagine, like, I could have gotten there faster if I just applied some first principles thinking and better methodology of not selling too fast, not being too impatient of getting to some revenue numbers.
Man, that's a very good advice. A lot of the time, because what I hear is, you have to sell first and foremost because that's the lifeline. Of course, not for many well-funded startups that have a lot of runway and so on and so forth, where selling is not as important. Like OpenAI, for example. I don't think that selling for them is as important. It's an important question to solve, but there's only so many people in the world that can pay $20 for ChatGPT.
Well, that leads to the other actually problem that many founders face, and I've felt firsthand. You have this euphoria feeling when I raised my first round, second round, when I see when I talk to founders who raise money. Like, after all, it's like so much hustle and work goes into raising money for your startup. Once you do it, you feel like, oh my god, the weight is off my shoulders. Finally, like, I have some good validation. Everyone's excited. I have the world at my feet. We can do everything. Runway is plenty. But then, like, you have that feeling and those for a couple of months. And if you don't use that 1 month, 2 months period to very smartly, you can actually have set the startup on tracks that are just like off the cliff, because you hadn't used that time to set proper milestone. Okay, what are we gonna do with the money? What milestone do we need to hit to actually keep running in the fast lane for next stage investors to be seen attractive, as well as to attract the right talent and be interesting for really good talent to be hired and make a difference, make a dent in the world. So you wanna have that mental exercise of slow down, not just excitement and hooray, but work backwards from the next milestone and set those milestones to get there, and keep yourself and every team member accountable. If you don't, you're just like cruising. You don't have a clear enough guidance for the rest of the runway.
That's also very good advice, honestly. That's you would think that that's the time where you can actually sit back a little bit on your laurels, right? You've achieved something tangible. Somebody else invested into your idea.
Yeah.
Here's specific proof, and you can survive. But yeah, you can definitely imagine that the amount of energy that you have at that moment can be diverted into something very positive and very productive, or it can be just wasted. So wasting that is a bad idea. No pun intended. Okay, those are interesting insights. I wanted to ask you, like, how did you get into 500 startups in the end? So what kind of advice can you give to other founders that are now looking to get into the top accelerators?
Well, I don't think it's needed actually nowadays to get into a top accelerator.
Okay, interesting.
Like, look at Y Combinator. It invented, that was the last invention that the venture capital world has ever has seen, and that was like more than a decade ago, I guess. And that was batch based. Like, every period of the year, they would have an intake of a group of startup founders. They work together on like a pressure cooker environment and have a goal that they strive towards, and the same finish line, and see what comes out of it in the end, and hopefully many can raise and have that momentum. So create that momentum for them while having a very fast-paced learning environment. So that's the concept of accelerator. They're better, they're worse, and I think it's the venture capital world is ripe for innovation now. That's at least the bet we're trying to do with bad ideas. So that's what makes it so exciting for me as a builder, as a founder myself, to be going into an old school craftsmanship or law office like business model, like venture capital, where you every partner, like historically, would be or as per current business model, would need to split the calendar into chunks and allocate some time to hunting for deal flow, talking to founders, talking and supporting portfolio companies, and it doesn't scale too much, right? And all you're reliant on yourself. So it's a very craftsmanship kind of business. I think it's always going to be there to a great degree, but with what we have seen possible being with a being done with AI, I think it's some big chunks of how VCs are run are ripe for this disruption, and that's what we're building. Think of it as a bad brain within BADideas Fund. Like think about it, like the future. I believe that the future of VC looks like this. In the future, if you have a venture capital fund that doesn't have a community, you become irrelevant. I would make that strong of an argument. Because if you put two different funds next to each other, one is pure capital deploying, another is capital plus community, meaning relationship to the world, like experiences, then that fund with a community will always come on top, I would bet. Because if you can automate everything away in your business, in how businesses work, you still need those connections to the real world or real world experiences that can like folks who have walked the walk tell you, hey, listen, don't just read these instructions how to build a startup. Like, listen to me how I made the mistakes while I got to those conclusions. And you want to still, as a founder, hear those stories and support and emotional support but as well as like being able to get connected. So I think that in the end, in a world where in the future you will have so much automated away by AI, the relationships in the world will be much more precious, and whoever can support those startups with that element, that real world element, better, will succeed. But the problem is, like, how do you channel real world relationships or community wisdom to the right founders at the right time, right? And I think of it as like old school telephone routing, where you have operators, and it's like so difficult to, like, there's a problem coming in, we need to match with the right ones. What's the context of the startup? What's the context of knowledge of a particular individual? Who could be the best match? How do I translate what the startup is struggling with to that person? So all of that is actually something that is solvable nowadays. You have to have good enough context about what the startup is building, how they're doing, what problems they're facing, and good enough context about like the experiences and successes of a particular individual and what connections to the real world you have. So holding both of those two together in one place is where the matchmaking can happen. So that's what we're betting on, and by betting that, I think we can create returns that are above what you see with other funds. I don't see anyone else in Europe building with this kind of thesis, any other VC fund. So it's exciting to be that runner in this sense. It's just like fun, even if it doesn't work out. It's it's so much fun to be building with an audacious goal.
And what's the fun part about it? Like, you're describing a very, very hard thing to achieve.
Well, here's the thing. I would bet it's much more difficult to build 10 times. It's much more difficult to build a 10% better Salesforce kind of competitor than a 10 times better than, I don't know, Tesla kind of mission. Seems contrary in reality, but like if it's conceptually, you can imagine that it is possible and it's audacious and ambitious compared to just marginally better, then you can actually attract the right talent who are driven not just by a little bit better pay. After all, like we are driven not just by capital as individuals. We want to have something that we can feel great about in the end. That despite all of this impossible, we actually achieve this. So I think it's actually easier to build just like any startup as well as a VC if you have an audacious goal, an ambition.
And that's often gets overlooked as well amongst the daily grind. And you mentioned yourself, so you've started in large consultancies. I feel that that's the place, the corporate culture where a lot of that can be washed away behind processes, behind like teams that are disconnected or interconnected, regardless, honestly. So what's your take? Does your corporate experience correlate with that sort of mindset, or does the current kind of corporate culture in adversarial relationship with that kind of build audacious things mindset?
Yeah, I'm torn with this. I think corporate culture is what startups are. Corporate culture is what will make corporations lose out to startups. That's so that's the corporate culture of corporations is what will help startups overtake them, disrupt them. As easy as that. But for me, having worked in bigger corporation like Ernst & Young and Deloitte, I can be very fortunate with the experiences I've had with the kind of foundation of how to run a business, how do you structure it, how to understand bigger enterprises, how do I make decisions and how processes work. Without that knowledge, like how you have to have both, I guess. But no, working in a bigger corporation is, and if you wish to build a startup, it's despite that culture you would build a startup. And I would go even further, coming back to that first, the previous point we discussed about ambition of founders and picking what ideas they actually work on. That's one of the biggest decisions they would make. And it's how do you source ideas? You source from like, what do I face? What sort of problems I face daily? What problems I see around myself? And if I'm surrounded with folks who are not pushing myself further, then I'll also probably lean towards more smaller ideas and marginal ideas. Actually, like a couple of weeks ago, I was in Ukraine, in Kiev. I was talking to founders there, and asking them what are you working on, what are you working on, and I could see a pattern. Most of those startup ideas were just too small to make them succeed. Too unambitious. Too like, hey, here's another calendar app or another like social media like automation app. Not audacious enough, not big enough. Which back to the point, like you can have a small idea that technically grows into a bigger company, but you want to have an audacious goal that you start with, and then you make realistic, practical steps to get there. There's no contradiction there, but you have to have that big ambition, and that's, I think, one of the bigger challenges of our region, whether that's Baltics or Ukraine or elsewhere in Central Eastern Europe. It's we have a high concentration of talent, technical talent. We might suck a bit at selling, but that can be improved. But more important is, are we coming up with the biggest ideas possible? And how do you come up with the biggest ideas? Well, you just try to be more exposed to that part of the world, to those circles that are working on big ideas. And so I would always recommend to founders, just take a couple of weeks off, even like 4 weeks off, and make your way into Silicon Valley. Just live there for a bit, be exposed. Even if you don't have tangible like results out of those 4 weeks, you'll get that charge. I go there try to go there every half a year, and that's what it's like a junkie. It gives you a boost for exactly half a year. I can run on that energy and drive. But you want to be exposed to that mecca.
So, what's your insights right now? How does Silicon Valley treat the whole very complicated market that is facing AI disruption from different forces? Market that is uncertain, unpredictable, with geopolitical things influencing everything. What's your insight?
It's interesting to go back to Silicon Valley once in a while and see what's on the ground, how people are, what they're doing, what problems they're solving, but also emotionally how they're feeling. And I was in SaaStr in the last conference, which is like the biggest gathering of subscription as a service type of businesses. And Jason Lemkin was on stage, and his main message was, he has this blog called SaaStr, and it's like a Bible for anyone who's building SaaS businesses. So you want to read up on him, and he has a decade of experience building SaaS as well as investing in SaaS. And his take was, like, previously, what you would want to achieve as a founder is triple, double, like triple growth year on year, and then double growth. That's the minimum you want to go for to be eligible for funding. Otherwise, you don't have enough momentum to actually take off, have that takeoff velocity. Now, the message is, it's out of the window. It's not enough. You are a meh kind of startup if you are doing triple, double.
Okay.
It's unfathomable, but that's the reality. And most VC funds in Silicon Valley, like I would say 9 out of 10, would even not take meetings, such meetings that they would have taken a few years ago, because they want to look for that one single fund returner that is doing AI, disrupting the next lovable, and so that is coming at everyone's piling up on this small part of innovation.
Yeah.
So everyone else who is doing more boring stuff is hurting. Like, there's less capital. So coincidentally, if you move out of Silicon Valley and raise capital there, it would be easier to raise than what would have previously been considered a very successful business.
So what's your take? You've mentioned AI several times already, and are you like an AI believer more so, or maybe an AI skepticist? What do you think is awaiting us in the next stage?
It's funny how the brain works. We are still complaining how ChatGPT is not living up to expectations, not doing as I would wish. But look at what it was doing a year ago, and we would have been blown away what it can do today. It just brain forgets. If you just extrapolate that, it's crazy where the world will be going. And but at the same time, I think it's the most exciting period. It can be. So here's how I'm approaching it. It's the next 1.5, maybe 2 years is going to be the most exciting in our lives if you're building in tech, because the changes are just so fast, and the possibilities what you can build are also so fast. So you have this dual feeling of, oh my god, everything is possible, and it's never been as easy to achieve great things as before. At the same time, hold the feeling of, oh my god, I'm so behind. I have missed the train. Everyone else is ahead of me. There's so many things have happened. I haven't caught up with that. Right, and that's what I feel in Silicon Valley. What I feel everywhere. That you always have that feeling. It is discomfort. But everyone's feeling that, so just get used to it. But it's going to be fun. So it might as well be like what we have a fun time building something that is for a better future, or we have a fun time building and then we need to switch off the lights once the last person gets out of the room. Well, and then we can have a good party in the end. Either of those scenarios, like it's what can you do? You just build. And hope for the best. But even if it's I like this AI in 2027 report, which was a bunch of predictors who do this professionally, like extrapolated what the world should look like if you apply basic growth metrics, what have happened so far. And their take was in 2027 March, OpenAI would have 200,000 PhD level, scientist level talent in their data centers, working 24/7. In summer that same year, they would have a nation of geniuses, like Albert Einstein geniuses. So should be that takeoff a year. And so anything else, that's why the name AI in 2027, because beyond that, it's just sounds like science fiction. What the world is like. So it's both exciting what's going to happen, but even if it doesn't happen, even if you're skeptic, you're skeptic about that it happens in 2 years, rather than and then you think it's realistically rather that it happens in 5 years or 10 years. Does it matter, right? Like 5 or 10 years is still a really, really short horizon of time. So what can you do? Just like build for that future. I think that's the answer.
How do you do that? So you mentioned automation, right? I want to ask you a brief question on the kind of everybody's waiting for that next unicorn of one founder, where thanks to AI tools and knowledgeability and general access to knowledge and the things that we've talked about already today, that it will become possible for one person just to become a unicorn, one man, one company, or one woman. How do you feel? Is that something that is feasible somewhere in the near future or no?
I don't know. It's feasible, but does it matter? I just assume that it is and build for that future. So it doesn't change, right? If it's a 10-person unicorn that's going to be built, or a 1-person unicorn, the path to supporting them, if I'm building a VC, is the same, right? You try to be the best at supporting founders in their path. In our case, like very easily. Very simple goal. Shorten the path from seed stage investing to Series A, to the next round, and increase the chance that they get there. Just that. How do you do that? By helping them not make the same mistakes that others do, not trying to reinvent things, have the best connections to get the customers and partners, and wisdom to nudge them along the way. So everything else should follow. Because you can scale much of that with AI, the time when building it is now, instead of discussing and having long debates. Is that future possible, right? And coincidentally, like even if OpenAI never or any of the other peers would never innovate anything else, right? And you would be stuck with using the tools as they are today. I feel like the economies, they haven't absorbed more than like maybe 5% of what is possible to be like some sort of like capital, like efficiencies or like improvements in business and how you run businesses, it just takes some. There's always resistance in companies, right? You know yourself. Like so, there's much. Even if you are total skeptic that this is the plateau of growth, you still have a lot of fantastic business potential growth in the future. And future businesses based on today's technology shouldn't look like it is today, right?
That's true. That's true. Do you have any specific examples maybe that come to mind? Which ones are, ripe for application?
I think it's a very easy mental exercise. Just take the top 100 tech companies that are currently out there, and they were built over the last a couple of decades, and you will need to have a new version, an AI version, AI native version. You don't no longer need, for example, start with UX, how the user experiences those products. You no longer need those probably most of those cases screens, how you go from one place to another, choose. You can actually finally rethink from a blank slate, from a blank slate of paper, sheet of paper, reimagine what that looks like. So I would say any industry. Well, I'm working in the digital space, so
Sure.
that's maybe easier to disrupt than digital plus hardware. But at least digital, there's not much that would be saved.
Yeah. Yeah, that's true. At least all of it is by nature can be addressed. Whether it will succeed, something will succeed, something will not
Yeah,
succeed.
yeah.
I like what you said about like, does it matter? Honestly, like that's true. That's a very correct mindset, I feel, in the current climate. Like you cannot predict the specifics, but the general trend is more or less obvious where we're going and where the corporations are taking us, the ones that are, the biggest ones, how they make the decisions, and what kind of problems startups are trying to address. So overall, you can the overall shape of it is more or less predictable. We are moving towards more automation. We are moving towards less human interaction. We are moving towards raising the value of those connections, of those communities, of tangible things that people can actually benefit from, and less in terms of you know artistry, like skill sets, where you can code, but now with an AI, a lot of people can code. And of course, the counter argument is, but can they code well? The counter argument is how many of the coders today can code well themselves. And it's definitely a rebalancing act. The more specific questions you ask, the less kind of specific answers you will have, because nobody can predict the future 100%. But I feel that the general trend is there. And if you move towards the general trend, you should kind of find your own path towards it. So yeah, that makes sense to me. That makes sense to me. But coming back to your companies that you fund and the ones that you look for, what are their stake on AI? Are they all AI focused, or only some of them? And what's kind of the general, vibe towards AI? Is it a necessity? Is it like a changing thing, or like how do people feel?
I think most startups shouldn't have an AI in their name, because AI is just ever present in everything they should be doing, whether that's the product or how they're doing things, whether their developers are using vibe coding, and some augmenting or copilots to get them be faster, or designers using Lovable to come up with mockups faster than before. I think the biggest risk is when you are. It's very easy to build if you are a handful of a team. If you're a small team and you're starting off, you don't have a baggage of features, of code lines to maintain, of relationships, and customers used to what you have been doing so far. Once you get there, maybe a couple of tens of people, maybe 20, 30 people or more, and you start to feel this weight, and everyone, and you have the same pressure of, hey, you need to grow faster. But at the same time, every team member has already lots on their plate, and now with the pressure, you have more on your plate. How do you carve out the time to actually look at new tools? How can I rethink how I do my job, that I do it much faster? I need to have the capacity, but I don't, because I have so much on my plate. So I've seen that having an intervention here or there as an investor, like both as a showing the great future, but also scaring them, you're going to be irrelevant if you don't change your ways, is something that helps shake up the culture. So you have to find that one or couple of hours or whatever amount it is, but every day a little bit of time where you are just experimenting, tinkering, testing out new things, however busy you might feel. If you don't, well, somebody else going to do it. But if you do, even at those small steps, doesn't have to be a startup at anyone. It's compounding. Every day you do a little bit, it compounds. So I would be with that mindset. You don't need to lock yourself into a room and spend a couple of weeks learning all about AI, but just a little bit goes a long way.
That's good advice. That's good advice. And on the topic of advice, maybe you have some short advice for startups that are just starting out, for founders that are just trying to flesh out their ideas. What's like top three things that they should keep in mind when building something new right now?
Top things that founders should keep in mind when starting out. Well, don't make the mistakes I did. Do some customer discovery. Don't chase revenue too early. That comes back to customer discovery, asking your customers what problem do you need to be solving. Then imagining the future and dreaming big enough. They seem like super small things, or obvious or cliche things, but the magnitude of impact they'll have down the line is just tremendous. And I would, and you can see that in second-time founders, how they approach things differently. They are much more careful before starting off with an idea or even raising money, before they have done the proper research of is this actually worth pursuing? And proper research, I liked, for example, Janner from Veriff co-founder. He started his venture by applying the same logic that I did with building a Veriff, which was somehow convince your customer that you're gonna now sit in their office. just be there and build your product from their office.
Uh-huh.
Can you imagine the difference? You could be doing the same stuff from your whatever, right?
Yeah.
You could have those calls and sync up, but just being there makes a big difference. And that seems obvious, right? And or maybe obvious. Maybe it seems out of too much than necessary, right?
Yeah.
But you can imagine also how much of the feeling or fabric you would miss if you just had a call and they told you the same on the phone, right? You want to be in the environment and spot things that are not obvious, or you can only see them when you are intimately in that environment. Does it slow you down of getting that next sale? Absolutely, it does slow you down. If sale is the goal, but sale should not be the goal. And when you're starting that early, it should be, are you really laser focused on the problem? And the only whether that you are identifying the problem or finding a solution to it, and that means you want to be embedded with the customer. So too few founders are doing that. I would highly recommend doing that.
Thank you. Thank you for your advice. Thank you for your insights. And thank you for your examples. I liked all of them. It's a very, very interesting kind of contrast to what I hear a lot. So where do people find you? Where do people read more of your thoughts or hear more of you speak?
Follow me on LinkedIn, and follow BADideas Fund on LinkedIn and other socials. We post a lot bad advice from founders who have walked the walk. So if you want bad advice, follow us there.
Well, thank you. Thank you very much. And thank you as well for taking your time to listen to our episode here today. If you want more bad ideas, we have those bad ideas here as well from time to time. But yeah, do reach out to Raimonds and do like this video and share it with your friends and comment on it and do all of the algorithmically correct things so that YouTube likes us. And see you in the next one. Bye bye.